Today, we are going to analyze a company that has been generating a lot of attention on social media recently, Oklo, trading under the ticker OKLO. Oklo is an advanced nuclear energy company focused on building small nuclear reactors designed to provide clean, reliable electricity. Instead of building massive traditional nuclear plants, the company is developing compact reactors that could power data centers, industrial facilities, and remote locations. Their business model is also different from traditional energy companies. Rather than simply selling reactors, Oklo plans to build, own, and operate the reactors and then sell electricity directly to customers through long-term energy contracts. The idea is very appealing. With the rapid growth of artificial intelligence, data centers, and electrification, demand for stable and carbon-free energy is increasing quickly. That is why many investors online are talking about Oklo, but hype alone does not make a good investment. So today we are going to apply our 8-pillar value investing framework to see if this company actually meets the criteria of a strong investment. The first thing we check is revenue. Right now, Oklo does not generate meaningful commercial revenue. The company is still in the development stage and its reactors are not yet operating commercially. That means this pillar fails because a healthy investment normally shows real business activity and growing sales. The second pillar is profitability. Since the company has not started large-scale operations yet, it is currently losing money each year as it funds research, engineering, and regulatory approvals. Early-stage companies often operate this way, but from a value investing perspective, this pillar also fails because we prefer businesses that already produce profits. The third pillar looks at earnings growth. Because the company is still reporting losses, there is no consistent earnings growth trend yet. Without positive profits, it is difficult to measure meaningful improvement in earnings. For that reason, this pillar fails as well. Next, we examine valuation. Most investors use the price to earnings ratio to measure whether a company is expensive or cheap. But since Oklo does not currently generate profits, this ratio cannot be calculated in a meaningful way. Without earnings, traditional valuation methods become unreliable. So, from a strict value investing perspective, this pillar fails. Now, let us look at financial strength. This is one area where the company performs better. Oklo currently holds a significant amount of cash relative to its liabilities, which means it has resources to continue developing its technology and pursuing regulatory approvals. Because the balance sheet is relatively strong compared with its debt, this pillar passes. Pillar 6, shareholder dilution. The sixth pillar evaluates whether the company is issuing large numbers of new shares. When early stage companies need funding, they often raise money by issuing additional stock. In Oklo's case, the number of shares outstanding has increased significantly, which means existing investors are being diluted. This pillar is therefore considered neutral to negative because continued dilution could reduce future returns for shareholders. Pillar 7, market opportunity. The global demand for reliable and clean electricity is enormous. As artificial intelligence, electric vehicles, and data centers expand, energy demand continues to grow rapidly. Small modular nuclear reactors could potentially become an important solution for that demand. Because of that large future market, this pillar passes. Pillar 8, business model. Oklo's strategy of building, owning, and operating nuclear reactors could eventually create long-term recurring energy revenue, similar to a utility company. However, the model still depends on regulatory approval, successful construction, and commercial deployment of its reactors. So while the concept is promising, the execution risk remains high. For that reason, this pillar is considered neutral. After reviewing all 8 pillars, the conclusion becomes clear. Oklo scores well in market opportunity and financial strength, but it fails several core pillars that value investors normally require, such as revenue, profitability, and earnings. This does not necessarily mean the company will fail. In fact, it could still succeed if its reactor technology becomes widely adopted. But based on the 8-pillar value investing framework, Oklo currently looks more like a speculative or venture style investment rather than a traditional value investment. In other words, it is a company with big potential, but also significant risk. And that is exactly why disciplined analysis matters, especially when social media hype starts to grow.